Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We are broadcasting live from the KFXR 1190 AM Clear Channel studios in Dallas. All right, Nick Santiago, President and CEO, fresh back from his winter vacation. Welcome back to the show, Nick.
Great to be back, Michael. Happy New Year.
Thanks, you too. Okay, you have undoubtedly cleaned up all last year. How did 2013 end for you before we get into today's trading room or the markets that you're going to talk
2013 was a blockbuster year, but 2014 is going to be even better.
Okay, all right. Trading room today, any special events you want to talk about before we get into...
Yeah, to start the day, we had some big, major small-cap winners. We had a couple of spider trades that happened to be real good scalps. We caught a Halliburton trade, a FedEx trade. I mean, traders, I don't know what they're waiting for. Just come on over to the trading room. You can see it for yourself and profit each and every day.
All right, that sounds good. All right, GLD, what do you think, sir?
Yeah, I want to talk about GLD today because I'm getting interested in gold now. Gold has caught my attention. The charts are really looking primed here. The stock's been, gold itself, the commodity's been beaten down for really since September 2011. Most often when an equity goes into a bear market, it usually will last about 2 years or so. You can even look at the S&P 500 when it topped out in 2007. It fell all the way down to 2009. That was a little bit about 18 months or so. So between 18 months and 24 months, sometimes 30 months, usually bottoms are made. And gold is starting to look like a bottoming pattern to me. I think traders could, if they're aggressive, can get in right now, or you wait for it to move up a little bit and form a nice bullish base, and you could jump on board. But the GLD looks primed. It's a prime candidate to go higher at this moment. Okay,
and the miners as well, GDX?
GDX, the same deal here. We're getting really, really nice setups on the charts. If you take a look at the GDX at the moment, the best way to play it is to let it move up to around $22.50, $22, $23 on the GDX. Let it form a bullish base and, come over to in-the-money stocks. And I'll tell you when that pattern forms. But the charts are setting up. This is being accumulated by the big money. So I'm watching it closely. And I think if you're aggressive, you could actually get in now, put a stop below the recent low. If you're not aggressive, you just let it go a little higher and then form a bullish base, but it does have another big leg to it.
Okay. All right. What about Apple?
I wanted to talk about Apple because I probably get inundated with more emails about Apple than anything else. And, on your show, I believe it was December 5th, I said, this doesn't have much more room to the upside. I think on that day, the stock traded up to around 570 or so. I said, I just don't see any upside. And then it fell right back down over the next couple of weeks down to around 540. I think Apple's going to continue to pull back here. I think it's going down to around 528 on the charts. It's currently trading at 552 and change. So it does have more downside, but it's just a trading vehicle at this stage of the game. I don't see upside in this equity at all.
Here's the question I have. All right, about 5 or 6 business days ago, we had a gap up. It looks like almost a hammer top on a Japanese candlestick basis, right at that 570. Is that potentially, in your opinion, technically speaking only, the first big push of institutional money saying, I'm one out?
Absolutely. That was a false breakout just yesterday, or I should say 2 days ago, when the stock caught a little bit of a bid on New Year's Eve, and today it's trading below that level. That's not a sign of strength in this equity. There's no strength here. I know the talking heads on CNBC, they're, shouting at the rooftops, call icons in the stock. There's nothing here. This stock has no upside. I mean, the best it could do is get to around 583, and then it's going to fall over like an old dried-out Christmas tree.
Yeah, this reminds me of that movie with Michael Douglas in it where he calls somebody up and then he dumps it. Yeah. Okay. Trans-Canadian or Trans-Canadian?
Yeah, I want to talk about Trans-Canadian because this is going to be one of my themes going into 2014. I'm going to be watching these pipeline stocks. Right now, this stock is poised to move higher if the Keystone Pipeline gets approved. I would not be a buyer here, but I am going to watch closely. I am watching the chart pattern, but I just wanted to put a little whisper into everybody's ear that if this pipeline somehow down the line, Keystone gets approved, this could be a major, major winner. Right now, I don't see it. The level I would be really, really interested, though, would be around $43, possibly even $41. But it's a pretty nice pullback that the stock has had really for most of 2013, and it's putting in a sideways base. So it tells me it probably has one more leg down, but this is one where probably around March, April, this can be a big, big winner because at some point this Keystone Pipeline has to get approved. I think the president is going to be pushed into it. I really can't see how it doesn't happen. And when I look at a chart like this, I see a lot of accumulation in 2011, 2012. We're coming back down to that level again. And if we get down to around the $43, possibly $41 area, I think traders got to own this stock.
Okay, big, big winner. Give me a number on the upside that you're thinking about.
Oh, this is poised. I mean, after the next pullback, you get in where, somewhere around the low 40s. This is poised to go to $60, $70.
Okay, now we all get the picture. That's good. Okay.
Yeah, that's why I wanted to give something out today where traders are going to be able to really make a big, big score. And you don't have to own it at 45. You can wait till it gets down, to the low 40s, and then you start to accumulate something like this. I mean, the upside on this is just massive.
Yep. Okay, good. OKE.
It's another play in the same sector, and again, there's going to be more than one company that benefits from Keystone. Right now, you had two train crashes recently, one in Canada and the one recently, I believe, in North Dakota. Warren Buffett has been in President Obama's ear. That's pretty much the reason, in my opinion, why the Keystone Pipeline has not been approved. He owns the railroads. Now that we're finding out it's becoming more and more dangerous to ship crude through rails, the Keystone Pipeline is going to gain some legs, and this is a company that could benefit. I would not be a buyer here. The level I would get involved in this company would be right around $50.
Okay, it's trading at 61, just to give everybody some perspective.
Yep, it's trading at 61. Let it pull back. It's certainly poised to come back in, but around 50, you want to be involved with this company.
Which is, on a weekly basis, that is the, 50-period moving average?
Right around the 50 weekly moving average, correct. And you also have prior pivots there as well, going back to September 2012 and also, I believe, May 2013.
Okay, upside potential, what do you think?
80, 85.
That is a huge ROI. Now, 80, 85, you're talking about like all next year, soon, maybe a couple of years? What do you think?
Yeah. I got to say, for most of 2014 into 2015.
Okay.
I mean, for the most part, especially if you let it, just think about it, Michael, if you could buy this at $50, and this thing has upside, according to my charts, to around $80, $85, it's a grand slam.
Yeah, it certainly is. Yeah, that makes everybody comfortable. If they can find something that they don't have to mess with and let it roll like that, then they can come back and take smaller pieces and enhance the return.
Sure, and another one in that sector that I'm going to keep on the radar as well is going to be Enbridge, ENB. If traders can be patient, let this pull back to around $40. This has upside to $65. It's currently trading at $43 at the moment.
Nice. All right, let's go back to what's going on right now with J.P. Morgan. I pulled it up earlier before the show, and it looked to me like on a daily basis we might have a spinning top.
Yeah, but the chart is still okay. This is starting. I'm starting to see some distribution, but just due to the light volume nature and the bullish nature in the month of January, JPM may have a little bit more upside. Where I'm thinking this stock could top out, Michael, is around $62. So I know traders are probably getting a little bit eager, but it's a tough short. Around 62 is a spot where I think it is very poised to top out.
Okay, all right, a little bit higher. All right, 2 minutes left. Talk to me about the S&P price and time. What do you think is going to happen next?
Well, right now when I look at the S&P 500, I mean, we have a decent sell-off day today, but I think that's a lot of profit-taking coming from last week's light volume. So I'm not so sold it's going to be a bona fide distribution day today, even though we are seeing a lot of leaders fall. If we get more downside tomorrow, I think the S&P could be under some distribution, but I wouldn't expect it to really decline all that much. 1770 still going to be a big, big support level should we see some real hard selling over the next week or so. One thing I do want to point out, though, is this is the first week of the month, and next week is really the first real trading week because most people are still on holiday. So it's going to be important to see how this market trades out next week. But all in all, I'm not bullish for 2014, so you're going to get a lot more bearish calls from me when we do speak. But overall, this market probably can still hold up fairly decently in the month of January.
Okay, yeah, you had mentioned last year that you were bearish for 2014. Should this market turn over and give us a pullback, wave 4, what what have you, whatever other technical analysis terms that we're going to use for calling the move. Give me some downside thresholds you think. Should we pull back throughout 2014 for the big picture?
I would say S&P 1600.
Okay.
Would be likely this year. I think it's highly probable that we could get at S&P 1600 likely this year. It could be even worse. It could go even lower. But there are two scenarios I have penciled out this year. One would be a market that falls probably into the fall season, and then we get another Christmas type bounce. And another market is that we could go into a bear market and have a recession in the United States.
Okay. Well, you'll be here, and we'll talk through the thresholds as we go forward. No problem, right?
Definitely. No problem there.
Okay. Contact info for you?
Yeah, come on over to In the Money Stocks. Take a 7-day free trial to our research center. You get all of our nightly setups. You get all of our videos. You get all of my cycle work there. Or you come on over to the Intraday Stock Chat, and you get all of our day trades that we do each and every morning.
And all the videos that you post every day so that people can find out how the day went.
That's right, and we put a morning video out each and every morning. I try to put a trade idea out there each and every day. This morning I put out a gold trade out there on that video, and come on over. Just watch it each and every morning. That's complimentary. That's free. Check out the website. Check out the blog. And I put a very good article today, Michael, on gold and the reason why I think gold is bottoming. I think every trader wants to check that out, and that's on the blog, and that's right on our website.
Thanks so much, Nick. We'll see you next week.
Thank you, Michael. Happy holidays.
You too. Nick Santiago, President, CEO, InTheMoneyStocks.com. Coming up